All right, what is up, YouTube? I'm back once again with a live video. Definitely want to talk to you guys about, the earnings calls that have been going on. Also, the record high for the Dow Jones. Let's go ahead and switch over to our account and see how good we have been doing. Sorry, I haven't been doing, day-to-day, uploads, but, I have been working and school has been getting in the way. But so far, we're doing pretty good on our portfolios. Go ahead and check it out. We're up a pretty good amount. Let's go ahead and check out Take Two Solutions, and we definitely see the stock is at $81. I'm personally taking a pretty nice gain for this in my account. We see we're up about $2,800 on that. We see the triple Qs, leverage triple Qs, we're up about $2,700 on that. So just about for our Take Two and our triple Qs leverage, we're up about $2,800 on that. So we're up about, I would say, roughly $5,600 combined both. And we definitely go up to Honeywell. Honeywell definitely did have a really good quarter. I was really impressed with what I've seen in the earnings slide calls and the earnings transcripts. If you're not aware of what those things are, definitely sign up for Seeking Alpha, or you can find these things on Yahoo Finance app. You can definitely look it up. I think you just type in the symbol's name. Once you have the symbol name, you can look up the news, and I'm pretty sure there'll be an earnings call transcript that'll be available if you scroll down. If not, definitely check it out on Seeking Alpha, because I'm pretty well aware that they do have a lot of those transcripts. And pretty much what a transcript is, these earnings call transcript is pretty much just telling you everything that they said on the call, and along with the questions. So that way you'll instead of just listening to the call, you can read along and probably skip through a lot of the parts, but you can definitely focus in on the important parts for you, and definitely help you out to figure out if this investment is going to be good or not. Home Depot is definitely moving down. I haven't had a chance to look at that earnings call transcript yet, but I know so far is that Home Depot is definitely taking a hit because of the moves that Sears is making. Now, if you're not aware of the moves that Sears is making, definitely check out that news. You can definitely do it via Yahoo Finance app or Seeking Alpha's app. Whatever app that you need, maybe even CNBC, whatever stock news that you need, you can definitely check it out with the company news to understand, how the company moves. We still see Clorox. We're not really doing much with Clorox. I'm pretty much on the sell side for Clorox. Pretty much might sell that later on. But we see for Chesapeake Energy, we're still trickling around with this $4 area, looking like we might edge up past $5. And it looks like, we're getting closer to that wintertime season. And typically that's when you start to see oil start to rise back up. But for right now, we see Chesapeake is definitely at that low point of $4.87. Looks like it's on the side to go past $5, but right now we're stuck at that $4 momentum mark. And we see Berkshire Hathaway, we're about $2,300 on that. And we go up to Apple. We see Apple, we're up about almost $3,000 on Apple. So we see these positions that I have been taking. We're up a pretty good amount on that. And we start to see Starbucks. We're down, a huge amount on Starbucks. I do own this personally. And we see that we're down about $600 on Starbucks. I am down personally in my account. I was buying Starbucks in the 58s and 59s. Now, later on, I might buy some more in my personal account at this $57 range, or I might dip in and buy Honeywell. Either which, these companies are definitely, something that I really want to be a part of. Not to mention that we see Square, definitely taking off. Like I said, $30 will be the next price target for this stock. And, once it's able to report, we're definitely going to see, how the stock is going to react. So let's check out, Chemours. And let's see if we can take this comparisons off. Let's remove all studies. Okay, there we go. We removed all studies. And let's go ahead and add. We got momentum studies. We go to where's it at? All right. Oh, we had it just a minute ago. All right. Momentum studies, and we go to the RSI. We add the RSI. Now, once we have the RSI, we see that the stock is definitely heavily overbought. We see that we're hitting all-time highs, and pretty much around this area where the stock started to fall down, this is the point where I said, okay, it's time for me to add my position, right? Because I was selling right here in this level. I said if it gets anywhere past or below $40, that's when I'm getting out. Now, when we start to see the slide happen, I know the slide happened, I think, I wasn't in front of my screen, but I was definitely, away, and I started to look at the market, and I seen that, this stock was definitely falling around this $34 level, and I was like, I just got to hold out, and the stock will continue to climb up because we have come a long way. $20 was definitely the IPO range, and we see we're at $48 now. My average price is around $38 to $39, right around that good range there. And we see that the stock is steady hitting all-time highs. So it's definitely, a pretty good stock that I will continue to hold until I see, some kind of negative effect. But until then, it's all positivity happening here. So we can go ahead and add our daily moving average. And this is typically how you want to add, patterns onto your chart, so that way you understand, what you're doing and what you're looking at. So let's see if I can find the chalk and oscillator here. I think it's market strength. Okay, chalk and oscillator. There we go. I mean, there's other indicators that we can add here, but I know it, take up a lot of room. And before we'll take out all the news, and we won't be able to look at the level 2s, and we won't be able to look at the the live price time and sales. But Chemours is definitely a stock that I'm continuing to hold. I'm a pretty good confident shareholder that this thing will go past 50, and before you know it, it'll probably be at $60. But I might add on to this position as well. So there's just a lot of opportunities happening in my portfolio. My portfolio is definitely doing a lot better. I know, it was stagnant because the market, really wasn't going nowhere. But we start to see the Dow Jones start to tick up. And pretty much, we see Caterpillar moving up, and we see a lot of things that started to move the Dow Jones up. We see, they all had in common that they had a really good earnings call. They reported a really good earnings beat, and that's what you have to watch out for. You have to watch out for those companies that report really good earnings beat, or they might, report negative earnings on that day, or you really never know. You want to watch out for the positivity. You want to watch out for stocks that present growth. Remember, those stocks that present growth, they will always be included in the indexes, and they will continue to move up until they get to the big show, which is the big show, Dow Jones Industrial, the S&P, the NASDAQ, those typical stocks, those will be in the indexes. But for right now, they might be, making their way up there. I know Take-Two is definitely making its way up there. I know they have ascended to another level in the into the index charts, because there are a lot of indexes that you have to pay attention to, and there's a lot of ETFs, and there's a lot of grouping that are going, that is going on with a lot of these growth stocks. So with that being said, guys, we want to pay attention to the growth names. And remember, just because you don't like the company doesn't mean you don't have to read through the earnings transcript. Remember, if a company reports something that's really good, you see the company's up 20%, you see the company's doing really good, you might want to look at the earnings transcript. Remember, you might see something that you're really, that you might like, and you might want to go ahead and dabble and buy some shares in this company. Remember, I had no clue what this company was, this Chemours company was. But once I started to read and understand, and read to understand the description of the company and what the company does, and I realized that I buy some of the company's products, like the Freon that goes in cars, Freon that goes in refrigerators. You never know. This might be something that you might want to invest in, but you see the company is definitely presenting growth to all of its shareholders, and at some point it's going to start paying higher dividends, because you start to see the stock is definitely overbought. So we're going to wait for a pullback, maybe a pullback around $45 level, for us to go ahead and start buying back shares or buying more shares. So this could be a trade for somebody, or this could be an investment for somebody. Remember, you want to wait until the stock gets off of that hot level and kind of comes down. I would say preferably less than 50 on the RSI to get us to get our attention to start start dabbling in and start to get small positions here and there. But once it starts to get oversold, like or close to that oversold level, like we see here, and completely just bounce back up and completely just keep running past all-time highs, that's when we want to say, okay, this is starting to get interesting, because I know this company is at a discount. I don't see any bad news coming out of this company. I know that this company is definitely, or the company's stock price is definitely moving with the market, right? If we see the company stock is moving with the market, we don't have anything to fear about it. But if we see the company stock is definitely producing bad news while the market is going down, and we see the market continue to go up, after the market went down, but we see the company stock is definitely continuing to go down, we definitely want to check out the news and see exactly what's going on with that company. But I didn't see any bad news with the company. All I saw was, a top growth stock. This is the stock that you need to be in, blah, blah, blah. And that's what pretty much what all the articles that I've seen. I didn't see any negative things coming out of that, coming out for this company. So I'm saying, this is definitely a discount. This is how you find stocks with discounts. This is how you find stocks on clearance levels, just about, and then, they become expensive later on. Domino's Pizza. Wow, Domino's Pizza is now below $200. I was going to talk about it being above $200, but now I see it's below $200. Now, we definitely have to do some research. We definitely have to understand why this stock has simply dropped off where it's at now. We see race to overweight, downgrades, 3 left for dead stocks. So there's pretty much not enough positivity going on for Domino's Pizza. This might be a price point for people to go ahead and buy in. We might want to look at this call transcript. Remember, like I said, these earnings call transcript, they will be available. They're available for the public. You can go on the company's investor side website and definitely check that out. I know Honeywell definitely have the earnings call where you can actually listen into the call while it's going on live. Or, Robinhood definitely has it where you can listen onto the call while it's going on live, or, whatever have you. But we definitely have to do more research and understand what's going on here. Okay, we see comp sales growth power earnings. Okay, metrics release. Beat, shares lose 3% free market. Rise after revenue beats. So pretty much we're getting an idea of what's really going on here, but we don't have an idea of what's really going on right there, because that is a huge move from an overweight rating by Stephens and Co. company. But we definitely have to pay attention to that, because remember, we want to be updated. And also, how do we find discounts? We see stocks that are getting hit the hardest that don't have negative news to them. But we see the company does have negative news to it. But we can also find a discount if we look at this earnings call transcript and we start to see, okay, we're going to see positive, we're going to have a positive outlook for the rest of the year. Okay, more growth is going to be presented towards the end of the year. That's when we start to say, okay, now we have a discount here. Now we're looking at, you may be looking at a trade. We might be looking to trade this company. $185 a share looks really good once it starts to get past $200. You want to sell. You make about $15 plus a share. That looks really good. But that's all I have for you guys. We can definitely look into more stocks. If you have any more stocks you want me to check out, definitely comment them at the bottom of the video. Remember, I really don't pay attention to penny stocks because they're a piece of crap. But remember, we want to focus on growth. We want to focus on things that we don't have to worry about when we sleep. So we know that our money is going to keep working for us in triple Qs, leverage triple Qs, because why? The NASDAQ is going to keep going up because it does present growth. It does have a lot of growth companies in there. And if we can look at from a NASDAQ chart 5 years from now, we see the NASDAQ chart continues to go up. We see the NASDAQ continues to make record highs. We see the NASDAQ doesn't really fall off, maybe for a temporary blimp in history. But after that, the NASDAQ bounces back up. Same thing with the S&P, same thing with the Dow Jones, and the same thing with a lot of these companies. We don't want to position ourselves to where we're, worrying about if we're going to do good on this investment. Remember, we want to find solid investments. We want to be able to look through this earnings call transcript, or maybe even listen to our earnings calls and say, okay, this is a pretty good company. I feel pretty confident that I invested in something that, that I really like and that can really make me a lot of money over time. And that's pretty much what we have to do. We have to get in that mindset. We don't have to be in that mindset to where we're making, $100 every day and be like, okay, it's a penny stock. But then after a while, we start to lose that money because our risk level is starting to get, messed up, and we don't have a really good perception. We don't have a grip on what our risk level is. And before you know it, you lost half of your value because you don't understand what your risk allocation is, because you're dabbling in and out of penny stocks. Remember, we want to present ourselves with growth. Once you get, some profits from those penny stocks, we definitely want to put them in those indexes. We definitely want to put them in a growth situation. So that way we won't have to keep looking over our shoulder, making sure that, a penny stock promoter doesn't downgrade our stock, doesn't, hype it up in the wrong way, starts to short our stock and gets his guys to start shorting our stock. Remember, I was like that the same way. Remember, I was thinking, this is the way to make a quick dollar. This is the way to get rich quick. But in reality, those guys were already rich. They were already trading on higher balances. They were already trading with $25,000 in their account, making, those 3 trades a day and being good. But what we don't realize is that if you're making, if you have a smaller account, we definitely want to focus on those growth names. We definitely want to focus on getting our account higher, and we definitely don't want to do it with the riskier way. If you do have a riskier way, this channel is not for you. But if you do want to do it in a safer way, and you definitely want to do it while you collect dividends, while you don't have to make as many trades as as a lot of people do, this is definitely the channel for you. I will definitely set the growth level for you, and we could definitely talk about the risk allocation for for a lot of portfolios. Remember, if the stock market goes down, we can definitely go into the TVIX, definitely trade those around. We can definitely play around with gold and trade those around. Remember, we can always be a trader at some time, but remember, we still want to have that growth. Remember, the stock market, it shouldn't be just your primary source of income. You should definitely have different levels of income. So you should have you should probably have a real estate investment. You should probably have a stock market. You should probably have your full-time job, and probably have maybe another business on the side, and just keep that money circulating, so that way you'll have multiple income. So that way you just won't be focused on trying to get rich quick, playing around with penny stocks. That's where a lot of these guys get you in the YouTube scams. So with that being said, guys, that's all I have for you. Take care.